Hey everybody, Guy Arnold. Once again, I'm doing another business partner spotlight, talking to business partners that I deal with that you want to know about their products and their services, and maybe you'll want to do business with them also. Today we're talking with Greg Pope with Prosperity Bank. He's got a very unique loan program that a lot of people don't know about, but they should. Go ahead, Greg.
Yeah, the loan program that you're talking about is likely our HOP program, which is, again, aptly named the Home Ownership Possibilities Program. It's a conventional product. It's a product that only we have because we put it right on our portfolio, and it doesn't require any down payment. It does not require any PMI, and it allows for a down to a 600 credit score, which is crazy unusual, especially for a low down payment product. It goes all the way up to a $350,000 loan amount, and it does not have any of the same restrictions that you're going to find with FHA financing, namely, the anti-property flipping stuff that presents issues on FHA, and the appraisals are obviously a little bit more lenient since it's a conventional product. So it's a real great thing, and it really helps a lot of people get into a home, especially with nothing down.
Yeah, I know you and I have changed the mind of a few people who are looking to rent because they didn't think they could afford the down payment. And with the 0% down program, we can get rid of that excuse. You and I have dealt with some people that were trying to get a home under an FHA loan. And in this tough seller's market right now, FHA loans are not as attractive as a conventional loan. So that gets rid of that excuse when they can go conventional with your program. And it's just got a lot of benefits.
Yeah. And speaking of those benefits, one of the main ones is that, the number one challenge that we're seeing right now in the industry, both real estate sales and real estate finance, is that, these home values have gone up so much that we're getting low appraisals, right? It's becoming more and more common. So this product is a great fix for that because your client does not have to make a down payment. They have all their funds set aside as a cushion so that in the event that does occur, and we never want that to occur, but if it does, then they have all that money set aside. There's not nearly as much money needed for the transaction to close it. And they can generally bridge that gap and we can find a medium ground where the transaction works. So
yeah,
it's a great
definitely makes it much easier for the consumers. But yeah, that 0% down just opens up so much more possibilities for them. Yeah, and I think one of the great recent changes to your program is when you and I started dealing with this program probably 2-3 years ago, it was capped at $250,000. Well, with the way Dallas area homes have escalated in pricing in the last year or two, it was really getting hard to find a home at 250,000 or less. So the fact that your company just raised the limit to 350 is huge for me as a realtor.
Yeah, absolutely. That's exactly what we were finding was that, we have this great program, but there is this limitation there where we can only go up to 250,000. That was consistently the feedback, that we were getting. So we did a little roundtable with all the people that make those kind of decisions, I suppose. And they came to the conclusion that it would benefit a lot of folks to raise that limit to 350. So that's a very recent change just in the last 2 months. And, obviously I know me and you have been spreading the word on that, but it's really bringing a lot of folks into play. And I want to emphasize that this HOP program is only zero down up to 350,000, but it actually will allow for financing up to 548,000. The only difference is you just got to do 3% down above that $350,000 mark. So, there's not necessarily a restriction just at 350,000. That's just for zero down.
Right. Well, that's still tremendous to be able to go up that high at only 3% down because a lot of other programs are going to require more than that.
Yeah. And it doesn't have any PMI and it's the same credit score. So it's, it allows for down to a 600 credit score. So what you'll see a lot is, say somebody's got I want to term it a middling credit score, maybe a 640 to 650. So, almost everybody else out there is going to put them into an FHA loan, which is very expensive. There's 1.75% that they charge upfront to do an FHA loan. So your client, will have a $6,000 or $7,000 upfront fee being rolled into their loan. And then there's mortgage insurance, which is permanent on an FHA loan for the life of the loan. And the reason they put them into an FHA loan is because they don't have any other products, right? That's the only mortgage product that's available to them. So this HOP is a great alternative to that. So again, 3% down, there's no upfront PMI, there's no monthly PMI. It really checks all the boxes and gives them an alternative that's going to be really helpful.
Now, I know there's a few restrictions or criteria that the people have to meet for it. Could you explain that a little bit?
Yeah, so this product was developed to help our bank meet our requirements under the Community Reinvestment Act, the acronym being CRA. So what that act states is that, if you are going to take deposits in certain communities, you have to be able to show the regulators that you're lending in those communities. So you're not just accepting everybody's money, but only lending to the most well-off folks. We're lending to everybody, right? So there's certain ways that we do that. One is we check how much money the applicant makes. So if they are at or below the median income, which is $89,100 in Dallas County, Collin County, Denton County, and $85,000, I believe, in Tarrant County, and it varies a little bit with some of the surrounding counties. But if it's under that mark, the median income, then they can qualify for this product, and there's no restriction on the house that they can buy. So, and that's qualifying income. So that's an important distinction because, say you got a married couple, one makes 85, the other makes 86. We might just do the loan in one person's name to keep them under the median income limit so that they qualify for the product. The other two are if they are buying a home in a low income census tract or a moderate income census tract. So the regulators want to see that we're lending to certain communities, and low to moderate income communities are one of those. The other one is a minority majority community. So we have a website that we go on that'll tell us the median income, the census tract data, whether or not it's a low or moderate income census tract, and then finally, whether or not it's a minority majority census tract. So more than 50% of the people in the census tract are minority. If it hits even one of those three boxes, then it's eligible for this program. And so that is probably going to be 75 to 80% of all transactions that you'll do. You'll find one facet that makes it eligible. So pretty much everybody,
I know you and I have had several clients have used this program in the last couple of years, and they've been very happily surprised when they compare the HOP program to an FHA loan, which they originally quoted. And I think there's just so many benefits to it for people. Your first-time home buyers that didn't think they had enough money for down payment, they find out it's easier than they thought.
And actually,
and I think the one thing we didn't talk enough about is the credit score. So many loans, especially last year when banks started tightening up all the restrictions, you needed a higher and higher credit score to get some of the more conventional loans, and that you can go down to 600 with that is amazing.
That's right. Yeah. And, one of our competing products that lenders who don't have this product will do is, like an FHA loan with down payment assistance or some type of grant program attached to it. And those start at 620. There's nothing out there that's going to go below 620 on the grant side. So right then and there, you've got 20 additional credit score points that you can qualify a client with zero down. Further, you really have awful terms on down payment assistance products that have a credit score less than 640. So realistically, you're talking about a credit tranche of 600 to 640 that's being underserved, that we're hitting with our product, that nobody else would be able to help. So it's really a big deal.
Yeah, I think it's just a tremendous product that not a lot of people know about, because your bank's kind of the only one that has this. And more and more buyers that I'm trying to help, I'm trying to make them aware of this product for you.
Yeah. And, there's another thing that should be said, and that's that this product extends all the way to ITIN clients. So if you don't know what that is, an ITIN is an individual taxpayer identification number, very prevalent in the Spanish-speaking community. What it means is they generally, for the most part, don't have legal status in the United States, but they've went and registered with the IRS. They pay taxes just like anybody else. And we will do loans for those folks. And there's only a select few out there, and it falls also under the umbrella of this HOP program. So there's three different versions of the program. There's the HOP 1, which is 0 down up to 350,000. And then there's HOP 2, which is 350,000 up to the 548 that I mentioned, which is 3% down. And then we've got this third variation of it, which is the HOP 3, which is to ITIN clients, and we require only 10% down on those to a max of 350,000.
Very good. There's a lot of options there for buyers then. So great news. It's a great product. I'll continue to tell people about it, and I think you and I will put a lot more people into this program this year.
Yeah, and one more thing, most people think 0 down payment and they think to themselves, well, I bet the terms on that aren't very good. And I want it to be said that the terms being offered on this are 3.125 with no PMI if they open a bank account with us on a conventional loan. So it's a fallacy to believe that, they're getting worse terms. And in fact, they're getting phenomenal terms. 3.125 to a 605 credit score candidate with no PMI and no down payment.
Yeah, it's pretty incredible.
Yeah.
Once again, I want to thank everybody for joining this. I hope you learned something. I've got all of Greg's contact info, so if you're interested in learning more about this loan program, reach out to me. I'll connect you guys, and I'll talk to you soon when I talk to some other business partners of mine, and have a great day.